Hi everyone, welcome to the channel. Today our focus is going to be on Meta Platforms, ticker META, known for Facebook and key acquisitions to include Instagram and WhatsApp, among other platform and devices, along with investing in AI technologies to incorporate into their products. Now, last year, when the stock did drop well underneath my intrinsic value, I passed on buying into the company because I'm not a big Facebook fan and I question their investments into the metaverse. But I should have based it more on the financial results instead. So this time, I'm not going to make the same mistake. In this video, we'll look at Meta's financials, perform a stock valuation, and at the end of the video, we'll go into computer modeling and forecast a 52-week stock movement. So let's jump right into it. Here's Meta's financials, taking into account their recent fiscal year 2023 results. And as one of the mega tech companies, we'll see extensive growth over the past decade for all the data points. And starting in the top left, we have dividends, which they currently do not pay. And from their recent earnings call, it does not sound like they plan to start anytime soon, as the company would rather prioritize returning value to shareholders through share buybacks. Now, speaking of shares, Meta did have an uptick leading into 2017 with their share count, but since then has been on a nice decline, down just over 1% from 2014. However, down more than 10% from their high in 2017. And we should expect this buyback to continue moving forward. So we're going to list this as a performance check. Then we have revenue, which exhibited a steady upward trajectory over the past decade with consistent growth. And the company's revenue increased more than tenfold from 12.5 billion in 2014 to 135 billion in 2023, representing nearly a 1,000% increase, which is a remarkable growth and another check. Then revenue per share growing consistently as well over the past decade, just under 1,000 at 996%. And to point out, while 2022 was slightly down for revenue, however, on a revenue per share basis, it was up more than 4.5%, helped by those share buybacks. And as Meta looks to continue buying back shares, we should see all the per share data points continuing to grow. And another check mark. Next, we have net income and earnings per share with down years in 2019 and 2022, while 2023 showed a strong recovery. And for the past decade, the results for each surged more than 1,200%, with earnings per share topping more than 1,250%. And with the 2023 turnaround, which was helped by the company right-sizing its labor force. And out of all the data points we're going to see, these two are the most impressive and two checks. Then free cash flow and free cash flow per share, not surprisingly, having the same trends. However, we can see over the past few years, free cash flow per share slightly outperforming free cash flow, which was helped by the share buybacks. And while free cash flow grew during the past 10 years, just over 700%, while free cash flow per share outperformed that with 710% growth. And again, two checks. As mentioned in the beginning, all the data points for Meta are heading in a positive direction. And next up is book value per share growing at 330% over the past 10 years, and another check. Then we have return on invested capital, and I like seeing companies over 10%. And we can see, besides from 2015, which was slightly below at just over 9%, all the other years are pretty much well over 10%, at least starting from 2016. You see, they've been over 15%. So a great data point there, and another check. Then net profit margin, which I like to see 10% or higher, and Meta is well beyond that. We see pretty much at 20% or greater. So another good mark there and another check. Then long-term debt to free cash flow. We can see up until 2021, they didn't have any long-term debt, but they recently took on some. However, this is a very small amount. I like seeing this under 3, and they're well under that. So you see zero point 0.5 back in 2022 and most recently 0.42. So this is not a concern, and another check. Now we can see at the top, across the board, all check marks, so great data points. Meta has performed very well on their financials. However, let's move on, perform a stock valuation to see where the stock is currently trading and if there's any opportunity to buy in at the current price. Here's a valuation for Meta, and we can see my intrinsic value is just below $430, and with a 90% margin of safety, brings it to just under $386. And this is based on a 20% short-term growth rate over the next 10 years with a 10% discount rate. And I am using a 3% long-term growth rate. Now, up in the top right, we can see the net income CAGR over the last 10 years was just over 33%, and the earnings per share CAGR slightly higher at 33.5%. Now, I'm only using a 20% short term growth rate. That's because I just think that 30%, 33%, I, I just can't believe that Meta is going to be able to sustain that for another 10 years. And I want to be a little more conservative, so I'm going with the 20%. Now, the stock is currently trading around $470 with a PE of just over 30. So definitely on the higher side. But let's just see what type of growth rate we would need to hit that $470. So I'm going to tick this up slightly. Let's just say 23%. Let's see what that gives us. We can see with a 23% short-term growth rate, the valuation jumps up to almost $544, and that 90% margin of safety, bringing it down to 490. So a little bit higher than what it's currently trading at. So let's just drop that slightly. Let's just say 21%. With the 21% growth rate, we can see it comes out to $464, and margin of safety bringing it down to almost $420. So basically kind of close to where it's currently trading at 470, though it doesn't give you much of a margin of safety. And again, I was using a 20% short-term growth rate. We can see slightly high here at what the market's currently valuing it at with a 21%. So I'm a little bit on the fence right now if I want to buy in by just upticking my growth rate by 1%. However, it doesn't really give a much of a margin of safety. So something you need to consider if you are going to look at buying into Meta at the current price. Now, I would like it to get a little lower, down to that 430, maybe even 440 range. But I'll see how the next couple of days, or at least the next week, plays out. If I feel it may be dropping, I'll hold off. But again, I'm on the fence at the moment. So let's move on now, and we'll go into the computer modeling, the forecast, the 52-week stock movement. In the computer modeling software, I already ran the analysis using two methods. First, the M5 rule shown here, and the other random forest. And this data is as of February 5th, so this previous Monday. And the far right-hand column is the weekly average stock price for Meta, which we could see is $468.11. Column right next to it is just the weekly average for the S&P 500 ETF. Other columns are just other various data points used in the analysis. Now, I already copied all the results and pasted it into Excel as it's a little easier to see. But we're just going to take a quick look here to see what the outlook is in 52 weeks. And we can see here out in February of next year, it's showing the stock about $500. But let's move over to Random Forest and we'll take a quick look at that. For Random Forest, same thing. Data is as of February 5th. And scrolling down, we can see it's actually showing a bear run for the stock closing out in February of next year at basically just over $265. So a little bit of a drop there. But let's go over to Excel and look at all these results a little closer. So back in Excel, I already pasted all the data from the computer modeling. And first thing I want to point out is the vertical red line represents this previous Monday, February 5th. And everything to the left of that vertical red line is the historical stock price, and everything to the right is the computer modeling predictions. Now, let's look at a little history of the stock price, starting back in May of 2012 when the company went public at around $30. And we can see from there, going into September of 2018, had a nice run up, hitting $200, followed by a little choppiness from late 2018 going into 2020 with some buying opportunities. Followed by a nice run up into 2021, getting as high as the $300 range, but followed by a big drop off in 2022, dropping below $100 a share and a golden opportunity to buy into Meta. And as I mentioned, I mistakenly passed on this, as I had mentioned in the beginning of the video. And from there on, had a nice run up from late 2022 until where we are today at the stock price around $470. Now let's jump over to another tab and we'll look at all the computer modeling predictions a little closer. M5 rule showing the stock price to be choppy throughout the year with some potential buying opportunities in May and November and reaching a high around $550 in October. With the 52-week outlook prediction showing the stock to be around $500 for a gain of almost 7% from where we are today. While Random Forest has a pretty bearish outlook for the stock, dropping throughout the year, and I feel this is very unlikely though, unless the market overall encounters a downturn. But looking out 52 weeks, it does have the stock at $265 for a loss of more than minus 40%. Then taking the average of the M5 rule around the forest, it shows the stock mostly trending downward due to the bearish prediction from Random Forest, with the stock price in February 2025 at $383 for a loss of more than minus 18%. To recap, I believe a fair value to buy into Meta is between $385 and $430, with the lower end taking into account a margin of safety, while the current stock price is trading in the $470 range. Now, Meta has shown very impressive financial results over the past 10 years, and to value it at the current stock price, I would need to increase my short-term growth rate from 20 to 21%, though it would not provide any margin of safety, and the stock is trading near its all-time high. As for me, I will wait to see if the price comes down to a range near my valuation and then consider buying in. Regarding the computer modeling, the M5 rule is predicting growth to continue with some ups and downs throughout the year and an overall gain out in February of 2025 around 7% from where we are today, while Random Forest has a bearish outlook with the stock price falling more than 40% over the same time period. Now, I hope you enjoyed this video, got some useful information. If so, consider subscribing, and I'll see you next time. Thanks for watching.